Morning, everyone. Welcome. My name is Jason Navarino, and this morning we will be talking about tax essentials for LLC operating agreements. I am a tax lawyer by training who now runs a general corporate practice where I work with a lot of clients on entity formation, governance, commercial contracts, debt and equity investing, and mergers and acquisitions and joint ventures, and putting together LLCs both for new businesses as well as for joint ventures, new projects that one or more businesses are getting into. Very common in my practice. So these are issues that I've been working with since the start of my career. And I look forward to speaking with you about some of the tax aspects of these matters today. Sure, I can advance the slides here. Okay. We're going to be talking today about, start with entity classification, understanding what type of entity you're dealing with. An LLC is a type of entity for legal purposes. It's not its own type of entity for tax purposes. We have to figure out what category we're going to be dealing with of the tax law when we're dealing with LLCs. We're going to talk about allocations and distributions, probably spend the bulk of our time there, distinguishing those two concepts, understanding them, understanding different options for handling allocations and distributions. We'll then go on and talk about qualified business income, or QBI. This is a tax strategy that can help save owners of LLCs significant tax dollars in the right circumstances, and if the operating agreement is dressed properly for handling those. Then we'll talk about tax distributions, making sure that owners of LLCs get enough money out of the LLC each quarter, each year, to pay their federal and state income taxes on their income from the LLCs. We'll talk a little about transfers of interests in LLCs and the various tax issues that come into play there. We'll touch on a few other tax provisions that are relevant in handling an LLC. And if we have time at the end, we will talk about profits interests versus capital interests. Two different types of ownership for tax purposes. Both are ownership. But the tax code, the tax law, gives us an ability to create something, to craft something as a profits interest, which can provide significant tax savings for a service provider, somebody receiving equity in an LLC that's taxed as a partnership in exchange or in connection with their services. So we'll talk about what those are and how to deal with that. But let's start with entity classification. So the default rule for LLCs, specifically domestic LLCs, foreign LLCs have a different set of rules. We're not going to talk about that today.